So everybody, starting off, since these things are to be really important in the upcoming week. So this is going to be things which personally could affect the market and could affect your trading. And I want you to take them into consideration when trading, right? So going in to just looking at this week, as y'all can see here for Monday, June the 16th. We are not looking for any given major news events. Personally, I think this looks fantastic. Like Monday looks so good for looking for any given setups in the markets, right? And I'm gonna explain my stance on how I am going to position myself in the markets in this next upcoming days, right? But first of all, I just want to touch upon the key events, right? So things you potentially should be aware of before just going in and looking at the market. So as y'all know, Monday, there's no substantial thing you are to look at the market. Of course, you have the wild card of the Israel and Iran war, but as long as the US, like US bases in the Middle East, does not get attacked, there will not be any major escalation, and I think we are to see an de-escalation in the next coming weeks or days, potentially this week, right? Um, but there is an also a chance that we see a major escalation in the war, right? A major freaking escalation in the war. And we'll see. But this is what people have feared for years, right? It's not because it's gonna be an outburst of a major war, right? But it's gonna be an war in a region which is very vital to the economy currently. All right, and we're gonna talk about why it's major, like why it's specifically vital to the economy of like the whole world economy currently. All right, because that all has to do with um, oil prices. And of course, we had a Tuesday right here. So on the Tuesday, you are just looking at core retail sales month over month. So not any substantial news, but you cannot, you still have to keep these things in your mind, right, when trading. So Wednesday, June the 18th, overall here, as you can see, we have federal funds rate. They're predicting overall stagnating rates once again. Personally, I believe so too, which is crazy good, right? For me at least, because I've overall have the belief, or I've held the belief for weeks over weeks while the dollar has been going lower, for a higher dollar actually. And I think yes, this week and next week and the week after that we are to see an rising freaking dollar, and it's gonna go crazy up. All right, crazy up. Like how they have positioned themselves over weeks has just been crazy. And I don't know if you, I'm gonna talk about through how many weeks, but I think it's even 6 7 weeks which I've anticipated higher dollar. Now, have I lost money on that? No. All right, because my model is still independent of my analysis, which is really freaking important, and a real-time example of how I base my trades, right? So I don't realistically base on intuition. I base on what I see in the markets. Really important, right? We talked about Marco's principle yesterday, right? But the events, right, of any given thing is not based on future events, things you're anticipating, or past events. It's just based on the market, what the market is currently doing. All right, the current basis of the markets. That's the only thing you can base, in principle, your understanding of the markets, right? And therefore, right, you cannot base on things you speculate will happen, or things that have happened or periods in the past, etc., etc. Instead, you need to base on the probabilities, the market. Um, you have to base your trades, right, specifically your trades, on where the current market currently is and in what probability space the market currently is, right? And I'll talk about this yesterday. I'm not going to disclose it here how you find out the probabilities of any given market position, right? Of like where in specific situation the probabilities of market doing this or that, and how you find that out. But it's pretty freaking simple. It's pretty straightforward. Everybody can figure it out if you're pretty smart. Now, on the Thursday, I won't be able to trade since we have a US bank holiday. I'm just gonna chill out. Every day we have a US, every day that we have like a US bank holiday or any substantial bank holiday, like I would say 3 countries having a bank holiday at once, I'm not gonna trade since I don't like the low volatility, low volume in the markets, right? And we also have some major news events for Swiss, Euro, and GBP. So I'm just gonna stay out of it personally. But I think if we see a substantial, I'm gonna talk about my stance on the markets later. Just just wait and see. Now Friday I will trade. So I'll trade all days except for the Thursday. Just remember that I've talked about the specific news events you have to be careful of. Now let's go into the wild card, right? We have the Israel-Iran war. Now I've specifically mentioned that currently, right, we have seen major uncertainty in the world already, and major uncertainty specifically in the economic sphere, right, where we have seen overall and anticipated higher inflation already due to Trump's liberation uh, trade tariffs, right? If you think about it, the world's economists have already priced in higher prices, right? If you think about it, that's just because of the tariff, right? And because of the global shakeup in prices. Now, we have not seen those higher prices. That's important to note. In the CPI events, previous CPI events, I was thinking prices would definitely go up because it would just make the most sense. But we have actually not seen in the previous CPI events prices rising, right? The core CPI events, aka we have never seen inflation rising, which the Fed, all other central banks has anticipated. Strangely enough, right? Now the thing which has kept inflation down. Think about it, guys. What is the thing that potentially has gone lower, or what is the thing which has gone lower, which more or less covers 40% of the CPI? Well, the thing which has gone lower week over week has been freaking oil, fuel prices, which has kept the prices of other goods down as well, which potentially have made the equilibrium on a lower stance. But imagine now, we have freaking all prices going up, even the prices of fuel, etc., which on oil specifically, like I'm talking about oil here. Now, what would this cause? Freaking higher inflation again. Now, this is freaking super bad, but this is something the Fed has anticipated, which is why it has kept the rates. But this just means potentially higher rates for longer, and not a quantitative easing period coming in anytime soon. Now, this could also spark a major shakeup in freaking the whole world because the oil prices, I would say, is the number one substantial thing which has kept us from going into a recession, a worldwide recession. Alright? But now, with oil rising, very freaking important to note, we might be seeing a world recession. Now, the probabilities for it is still low because we don't know where this war will take us, right? So it will not be a world war, it will not be all of this thinking thing. Don't get FOMO of those things, all right? It will just be lower prices for longer for stock market, and that's specifically what I'm mentioning here, or higher dollar for longer. Specifically, I'm watching a lower dollar, but I'm thinking the dollar currently is going to skyrocket, right? I think the dollar is going to skyrocket, and I've said it week over week over weeks, and I've not understood the catalyst which they have been looking for, but they have looked for since the majority of the things have pointed towards a bullish dollar, but we've never seen a bullish dollar due to speculators pushing down the price of dollars. But it has been the large speculators, but the commercials. But now I think I know. So I think they've just locked up the dollars. Now, as we have seen, just one simple thing can cause a higher dollar, since everything else points for a higher dollar. So it's just a higher probability for a higher dollar, and that's just what I'm keeping. We've talked about this with the students, with the shorter students, etc., but it's just a really freaking important thing. Now I'll talk about what the implications of a high dollar will mean for the rest of the world, etc., later, for the rest of the markets as well. Uh, No, I don't think it's a good investment to buy dollars and hold it. No, no, no. I would just wait for. No, no, no. That's not a good thing. Currencies is shit. Don't ever go into fiat currencies. All right. You can trade it, right, with CFDs, with leverage, right. But thinking about like just buying dollars and holding it, of course you might make like let's say 3%, but in reality the 3% will just be gone with inflation. So you won't ever, when you're holding things, you should hold um, non liabilities, right? You should never hold liabilities. Instead, you should hold properties, etc., etc., or just equities in general, right? Exactly. So never like try to trade with like real money currency. Instead, trade with CFDs, trade with leverage, etc., etc. So it's just much better. And I cannot give advice on anything of this sort, but that's just my belief, right? Now continuing here. So what do I actually think? Well, personally, I'm extremely freaking bullish. You already know it, but we are. So just continuing here, everybody. I've previously, I don't know if you guys, but I can for you too when I upload in this call. I'm pretty much gonna go into um, and add a link here for the previous week's calls, which I've done for also students, right? And I'm specifically gonna mention key things. All right, I'm not gonna go into detail about these things right here, but you know, fundamentals, etc., etc. What people want to call it, I call it externals, have been pointing upwards for a great deal of time now for a higher dollar, right? And you definitely, which large speculators have tried to, you know, push down the narrative of, right? The narrative of why they were, making the dollar go lower was because, oh, it's not a safe haven asset anymore. It's not the global um, hegemon, right? It's not the U.S. exceptionalism is gone. You can never hold like long term debt anymore because it's not a safe haven currency. But all of this got proven wrong in the latest debt sale, right? Which the U.S. Treasury did. You can post pretty much all of this later, all this information for everybody later in the server. So you can read about this. But what does this mean? Well, for normal people, you don't really understand these things. But for me, I would say this is very significant because buying treasuries, holding treasuries, locks up dollars, and locking up dollars pretty much shakes up the supply-demand factors of dollars, pushing up the dollar price, which I've been watching for literal for so long. All right. And personally, I think now is the time for a big reversal for dollars, right? In terms of fundamental supply and demand factors for dollars, right? Since we've actually seen the large speculators' theories getting proven wrong, right? And so we've seen the commercials also locking up dollars at the same time, um, pretty much providing us with a safe bet for a higher dollar. I'll personally say. And of course, this is just my interpretations of things. And I'm gonna talk about COT, etc., etc. But this is the thing you have to research yourself, right? Now going into detail about the specific dollars, I'm gonna show you the COT for it later and what I've talked about week over week. If you have not already, please make sure you have watched the previous calls where I actually go in detail and talk about yields, etc., etc., so you can get a better understanding of what I've been actually watching and what I've been pointing out for weeks on weeks for a higher dollar. Now specifically, I had my draw on liquidity here for structural reasons up here, and that's just because we have a big liquidity imbalance here as well. Um, which I've previously mentioned, talking about it in previous calls, and it has only, pretty much become with time, right, even larger, right? So the liquidity imbalance has become even bigger now. Um, I'm gonna show you where the previous calls is later. I'm gonna do it at the end of this call. Don't worry, bro. Don't worry. So overall, looking at it from a structural perspective here, well, as you all know, I trade liquidity imbalances here as well. We have pretty much taken out all sell side liquidity here. And as you all know, then therefore we should go for the buy side liquidity in a simple, universal way, right? Market's always trying to find an equilibrium. As the universe tries to find an equilibrium, right? It's just market needs to abide by the, you know, um, universal laws, right? Cannot break um, laws of physics, right? And so as we are pretty imbalanced here on a liquidity basis, but also in a fundamental basis, personally, the probabilities is pointing upwards in terms of analysis. Now, this is my model because I think all price here is random, right? But I think in some specific places the market is not random. So this is just my analysis, right? This is not what I'm trading. So I'm not currently in any buying positions for dollars, or you cannot buy dollars, but I'm not in any sell for foreign currencies, etc., etc. I'm not in a shorts for foreign currencies. Instead, I'm just looking for a higher dollar so I can later go in with my model, independent of my bias, and look for shorts on euros. So looking at this, right, I'm more or less bullish I had my previous strong liquidity up here. I'm going to talk about why, but it's just because we have a lot of equal highs up there. But I've moved it down a step, but I think, we can even move it up here for the 104,773 level. So I think that's a clear target now. I'm going to talk about why in terms of third line dynamics, etc., etc. But just looking at it on a daily perspective, you can see right here we have taken out major sell side liquidity, and once again we've taken out major sell side liquidity with fundamentals being bullish. Now, engineer liquidity and fundamentals pointing up higher, right? Pretty much makes me believe that we have an extreme higher probability of reaching up higher, especially now during big uncertainty. I've talked about previously during big uncertainty periods, which is something I've tried to have big emphasis on the later calls, right? And that's just because now we've gone into a risk-off environment where risk overall trying to the all positions, right, with risk is going into safe haven assets instead. So now it's going into treasuries, locking up dollars. Now it's going into dollars, locking up even more dollars. Now it's going up to other things, right? Especially here where we are very liquid, right? Buying and selling dollars is very freaking easy, or has been for later parts of especially buying, right? Since you have a lot of sellers, it's so easy to buy dollars, right? So now we're locking up dollars, and I think we're gonna see therefore an up price in dollars, like looking at it from a fundamental perspective, which I would call it just a simple explanation of why I'm looking for a higher dollar, right? So personally, I think we are just to deliver up high here from here, like day to day. So from Monday, Tuesday, Wednesday, Thursday, Friday, I think it's all going to be bullish. Even the bank holiday Thursday is going to be bullish, since I think we're going to see um, just higher prices throughout this entire week, just extreme high prices. And I'm going to talk about it from an order perspective here as well, looking at orders, etc., etc., from uh, comminimum traders reports, which commercials has just been hedging for bullish dollar. That's why all throughout this period right here, which you can see from overall 20 Monday 20 the 23rd April, right? I have been bullish, 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 bullish on dollars, right? And I've traded this. I've traded pretty much shorting euros, shorting GBPs on the lower time frame model, right? Because I've had like a bearish stance on the markets in my model, right? And even though my analysis has been wrong, my model has actually, delivered and made me some money, but not that much money. But now, in this extreme environment, I think this is just a gold mine for opportunities, right? For looking at my perspective, like higher dollar, right? Because I think this is the last domino which needed to turn for a higher dollar. And I'm going to talk about it specifically later for students, etc., etc. But now let's go into lower time frame basis. So as you all know, we have pretty much previously swept this low, right? And taken that low out. I think personally we are just to see a big gap up higher. So for example, gapping up potentially up here with when the market opens. So I don't have a specific levels because I've not looked at any specific levels. But if you want to, I'm gonna show you all of it. I'm gonna show you all of it, what you need to look at the later stages of this call. But I think even potentially we'll jump up this week potentially to deliver up to 100, the 100 level up here. But not a gap up to 100 level, but I think we're gonna gap up to potentially 99 here, and then we are to just continue up bullish, bullish, bullish. So what ICT traders and many other people would call an buying program or just great trend line upwards, I think we are to see like a great upwards trend line throughout the entire week here. So for people that would look something like this. So just a great upturn, great just high prices all throughout this week. So there's a lot of things you can calculate this like. But if we see lower dollars this week, then we have huge problems, like even greater problems than I've talked about now. So if we see like for example Monday gapping down lower, which I don't definitely expect, uh, then I don't know, bro. Then it's gonna be crazy. But I think we're gonna gap up higher. I think the dollar is gonna continue up higher since when we had the war and being announced here, you can see we pretty much traded up higher, and I think the war has only escalated as of now, and Israel is even targeting energy infrastructure, which brings us to the next point. As many of you all know, or hopefully know at least, oil is super freaking important when looking at dollars, right? Oil and the American dollar, or you know prices of American dollar, or how you price in the American dollars, like the DXY index, right? Is super freaking correlated. So if oil delivers up higher, and we have not seen the dollar deliver up higher, we should definitely see the dollar deliver up higher even, because as we've talked about previously, from a fundamental perspective, the only thing delivering down lower week over week while prices has been delivering up higher has been oil, as you can see. So week over week, right? This is weekly price has been lower, 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 lower oil, as you can see right here. So just lower oil, but the CPI has gone down lower, therefore, right? But now, since a lot of people were expecting higher CPI, right? The only thing which has kept the CPI down, all right, has been these lower oil prices. But now oil has been rising, which brings me to take the conclusion of that yes, CPI is going to go up, and if CPI goes up, what does the Fed has what what brings that as a conclusion for Feds to do? Well, hold in higher rates. And what does higher rates means? It means higher potential of locking up dollars for average higher return, right? Which brings me to the conclusion of a risk off environment as well, since we are to deliver into safe haven assets, one of them being the dollars, which brings me to the conclusion that everything is freaking pointing upwards towards the dollar. Hopefully everybody have understood this by now. But yeah, it's just pointed towards a freaking great push up for the dollars, right? So it's very great for trading now. Currently, currencies, etc. But this will also pose very great opportunities for indices. I'm going to talk about this later on other equities, right? And you can also see gold has gone up higher now, potentially reaching for new all-time highs in this uncertain environment, which brings me to another conclusion that yes, we are going into a risk-off environment, since if gold continues rising here, that's just an indication of risk off. Gold is also a safe haven asset. So safe haven assets being assets which you hold with risk off. You can just research this after this call if you have any further questions. Of course, also DM me or at me in the chats, right? I need you guys to just write me all the questions, right? Because I think everybody here have a lot of questions, and I would definitely be real happy to answer them. All right, now or later, you guys decide when you feel comfortable to write me any questions. Now going into foreign currencies here, as y'all been seeing, Euro USD has been going up higher. I've been freaking bearish on it since 21st of April, as I've talked about, since I was very, very bullish on the dollar. And as y'all know, they're inversely correlated. So when we're seeing a rising dollar, we should see definitely diminishing price in the euro. And especially now, because euro is not a safe haven currency. It's not a safe haven asset. It's not a store of value. But the dollar is. You can see it in the central bank holdings, etc., etc. We're going to talk about it later when we go into COTs, etc., etc. And we're also going to talk about seasonalities later. I think DAX is very good, but I'm going to talk about this first, and then I'll answer your question. But keep that for the studio call later. We're going to go through it, all right? I'm going to answer these more advanced questions later, all right? So don't worry. But yeah, you can see right here we have seen a rise in euro, even though we should have seen a diminishing price in the euro USD, especially because the dollar has a higher rate and the euro has a lower rate, right? And if you compare it, you can compare it through. I'm actually going to pull it up. So you can see here on FX Factory, right here, Forex Factory, that we have seen lower rates, lower rates, lower rates for the euro. So it's even at 2 freaking percent right here. So the rate is at 2% right here, while for in rates. And if y'all know the rate correlation to price, we should see with a a higher rate, the currency should be higher, and with a lower rate, the currency should be lower. And as you can see, they have the ECB, like the European Central Bank, has been cutting rates, while the US Central Bank, if you can see right here, has been keeping its rates steady, as you can see right here. And even further now, this Wednesday, I think they're going to keep it at 4.5%, which creates this crazy big rate imbalance, which makes now, like, hopefully, if you understand this, this just brings me to the conclusion that then high euro, a crazy high euro, and euro, which you could see right here, is this high, higher than dollars, just makes absolutely no sense as a store of value now, and the supply demand dynamics here is just so skewed. So it's just speculators, aka dumb people, which has pushed up the price of euro and has been bullish on the euro. And I think even a lot of traders out there is bullish on the euro because they can see this as an uptrend. They can see this, oh, we're bullish order flow, ICT traders, etc., etc. I'm in ICT trader, but I'm a little bit, I don't know, I'm trading a little bit differently. But yeah, they're just pretty much being speculating up the euro price while it's just this imbalance. And when they start to realize that, wait a second, I think this is a little bit overvalued, it's gonna dump like crazy, and that's exactly what I'm looking for. Now, if you pretty much position then your modeling lower, which I've been doing for past weeks since 21st, I think you're gonna get a great return on like an ROI, right, on your model, and that's exactly what I'm trying to do here. So I'm trying to just scale prop firms, scale live accounts further, right in here now. So now my focus is, because my focus has been on the past 3 weeks here on indices. I don't know if you know, but we have had pretty we have had some live calls for indices here. Like me trading NQ. I don't know if we can go into the last trade as well. We took, because I think I ended the call pretty early, but I think majority or some of you guys actually were here during that call, so you guys will actually be able to see what actually ended up happening to price after the call of what I said. I won't go into detail about it because now it's hindsight, right? But some of you guys will be really impressed with what price actually did after our call. So yeah, I think we're gonna reach for the drawn liquidity for a structural manner. Yes, we are also structurally based for lower prices on the euro, and that's just because we have taken this buy side liquidity and we are reaching for now some sell side liquidity. Pretty easy to explain from a just central perspective of that. Well, fundamentally, we are super bearish. Now, structurally, it's pointing out towards a high being priced in here as well, as you can quickly notice, right? Plus, we have seen the Monday not deliver euro higher, but instead deliver the euro lower, right? And I won't go into detail, but the bonds prices of euro has been going up crazy, meaning the yields for the euro, right? The euro yields, right? Has been like crazy freaking low, which is once again brings me to the big rating balance here. But let's go into a lower time frame basis, so like 4 hour right here. So as you can see, looking at it, we have a great level here for previous level. Personally, you also have this supply demand zone or order block or whatever you want to call it. You have this at least high liquidity resistance zone right here. And so personally, I think we're gonna deliver to that. You can notice the level pretty much set is potentially 1.15769. That's just one level I would personally have. For people watching the previous standard deviation call, you can figure it out pretty easily with standard deviation and a zone in. And I'm just gonna pretty much show you guys those calls after I've just talked about a little bit commitment traders and seasonalities here for y'all. So yeah, once again, we are just looking for low prices here and low prices all throughout this week since the final domino has fallen into place. Now, quickly talking a little bit about NQ here. As y'all can see, the Monday we saw a big little dump right here, or I'm sorry, the Friday we saw the big little dump right there, and that's just because of the escalation in the war, etc., etc. Now that's just priced in prior to these highs, right? So for people not saying, oh, the dollar is not correlated to NQ. Yeah, it is, but it's not directly correlated. It's indirectly correlated since NQ is not a freaking currency. All right, currencies is directly correlated to other currencies, while other asset is indirectly correlated to other assets, and the dollar correlation to NQ is overall indirect, which is why some days you can see it higher dollar with a higher NQ. Some days you can see it inversed, but overall, looking at the bigger picture, looking at the bigger time frames, you're gonna see them being pretty correlated, and that's just because they're indirectly correlated. So if you see month over month higher prices on the dollars or risk on risk off scenarios on the dollars, you are to see a lower scenario on NQ, which is exactly the thing we're looking for, because now we're looking for a risk off, not stocks going up higher, because big uncertainty in the world, and so we are looking for NQ to drop off. Hopefully all of this makes total sense. Now, continuing here. So, as you all know, as we're looking for a higher dollar due to the reasons of war, right, and due to other fundamental reasons, but for a short period, we are also looking for a short little dip for NQ. Now, your job now is to figure out where the low will be, because on a structural basis, well, personally, I would just look for some sell side liquidity, potentially this gap fill getting filled here. So I would just look for this gap fill right here. So potentially 2052 would be the low, and then we're just gonna go for new all-time high. Since I'm not bearish for longer than a week for Nasdaq, hopefully everybody heard that. I'm not bearish for more than a week for Nasdaq. Indices is a very bullish asset, right? Very bullish asset class, and especially when we're this close to new all-time highs, we should just push through them. And so I'm just bearish for 1 week, and then we're gonna push for new all-time highs, and then we're gonna consolidate. That's just been my bias for a long period of time. So hopefully everybody understood this. I'm just gonna draw some arrows so everybody who might face some problems will just see this. So I'm potentially looking for one bearish week, and it's going to be choppiness towards the downside. So not the best price action, which is why I'm focusing a little bit more on currencies this entire week, but I'm still focusing on Nasdaq, new all-time highs, and then we will see what the economy does. Since all of this will have its impact later during the year, so not now, potentially even next year. The implications of these higher oil prices, etc., will be priced in, but some speculators will price this in early, and so you'll see indices following falling. Just but I think if we don't see any major escalations, right, we are not to see low prices. It all depends on how things works out, right? And I also said it all depends on how things works out for the dollar. But at least for this week, I'm bullish for the dollar. I'm bullish to the drawn liquidities, guys. I'm bullish to the drawn liquidities. Hear me out. But for indices, it could vary for how low we go, etc., etc. You just have to figure out in a structural manner or in a fundamental manner, all right, or in both, which I do. So this is your homework, more or less, to figure NQ, right? I'm not really the best on it, so I cannot, give you guys the best analysis on it personally. But all my analysis has been based on what I personally think. But I think a little bit of a dip here, but not great of a dip, since I think people are just the best analysis on it, if I'm honest. I just want to be honest with you, but I cannot give you great insight on Bitcoin. I think you know better than me, for real. But personally, I'm pretty bullish on crypto as a whole. I'm pretty bullish on indices, as you heard me, and I just think you have a similar analysis for indices and crypto. So I think overall week lower, like weekly prices lower, and then just high prices potentially pushing new all-time highs for Bitcoin. That's just what I feel. And as you can see right here, we have had some new data drop in here this last week. As you can see right here, we have just been seeing continuing bullish hedging, meaning as you can see, the commercials has been hedging bullish for past freaking weeks. This means, in essence, since we have not seen these high prices, as you can see, we usually see directly corresponding high prices. But I think this will be major freaking push up higher for dollars. Therefore, since we have seen um, they've been very bullish, and I have not understood why they've been bullish. If I'm honest, yeah, from a fundamental perspective, yes, I've understood why, but I think the only now thing they have been waiting for was just one final push for the dollar to rise, and I think they knew eventually the dollar would rise because it just needed one little small push for a higher dollar push, or for higher dollar, right, to get pushed up higher. Similarly, we have seen euro going lower, lower, lower. And I think finally open interest will pretty much be liquidated. Open interest meaning leverage positions have gone up crazy for euro, as you can see, just rising, rising, rising. I think this news event right here will pretty much offset a lot of freaking large speculation. So I think large speculators is stupid, all right, and retail as well. And like look at this: large speculators and small traders. Which overall small traders is what you've been in, and small trades is usually never this freaking much of a liquidity spectrum. But you can see right here, they've nearly approached 100,000 orders, right? Which is freaking crazy. And you can see, like, I would definitely not want to be part of the small traders up here. Like, from the 21st of April, I've been super bearish for Euro. And a lot of people have been bullish. And I think majority of TikTokers, YouTubers, whatever, has been bullish here. Continue being bullish on Euro because it's bullish order flow, right? Or bullish trend line or whatever. You're all trading the same thing. You're not trading in the background. You're not trading what the real thing is saying. But you can see right here, this is the final catalyst for the large liquidations to happen and a short squeeze on euro. And I think this is exactly what we'll see. Now, just looking at seasonalities here, seasonally, we should also see a rising dollar. So as you can see, year over year for 20 past years, this month has been bullish, and so I'm looking for bullish prices on euro. Similarly, I'm looking for lower prices for euro, right? So dollar has been rising year over year for the past 20 years. This month, Euro has been falling for the past 20 years, year over year, and as you can see, all of this is pretty much aligned. And so I'm looking for a big freaking fall for Euro, all right, to the drawn liquidity, which I've shown you. So long term, I'm still very bullish on Euro, but short term, I'm freaking bearish on Euro. Hopefully, you understood this. Short term, freaking bearish to the drawn liquidity on Euro. I showed you the drawn liquidity earlier. Now, go in and just quickly summon this call up. Hopefully everybody have understood what I've previously tried to talk about and said to y'all. Everybody here, have you understood it? And have you understood it? Understood my analysis, what I'm looking for, etc., etc. I'm just gonna double check so everybody do not have any specific questions. We will see, however. So if you have any questions, just let me know right now, so I can go into detail about them. See you later, so free. See you later, so free. Anyways, summing this call up, I'm just gonna quickly show y'all where you'll be able to see and find my videos, alright? My past videos. Of my videos is just going in right here to my YouTube channel, as y'all will be able to see right here, and looking at, firstly, becoming a GOAT. This is very freaking good. This is like step by step in a manner where my videos have been uploaded month over month, so you can get like my previous analysis, what I previously looked at, but also some great insight into some great concepts of what I'm using. But then also pretty much looking at my basic methodology. All right, in this you'll be able to hear my previous videos of actually how I'm basing my analysis of things, how I'm understanding the market the way I do, and the things I use. So I, for example, I've uploaded a call of how I use COT seasonalities already and dark pools already to confirm my trades, how I use structural manners, liquidity specifically, how I use liquidity in a structural manner, but also how I use standard deviations in my calls, right, in my videos. So hopefully you guys really appreciate this. But furthermore, you have so many more videos you'll be able to watch. All right, you have so many more videos you'll be able to watch. I'm just going to show you a few, but all of this is very freaking good, and this is past calls. All of this is pretty much past calls. Some of it is specified videos, as you'll be able to see, but other than that, right here you have the previous freaking calls, and you can see I've been calling the market for months on months on months. All right, I've been doing this for approximately, I think, when did I start this? I think 3 years ago, right? And I've been calling the market consistently for 3 years. Of course, it's all analysis and it's all independent of my model. So me calling the market, me understanding where the market will go, is independent of my returns, right? It does not overall speak for my returns, which is really important to note, all right? My returns is only when I execute on the markets. I can predict whatever. I can say where Bitcoin is going, etc., etc. But if I'm not investing in Bitcoin, I don't earn any money on it. And this is really important to tell you guys, all right? But all of this is just how I think, etc., etc., how it works, how I think, and what makes me different from all other people in this space. Thank you all so much. Hopefully, appreciated this call. I'll see y'all in the next one. And bye, guys.